Amicorp as a group, we've been to exist in 92. We've got 40 offices across the globe, to be precise, 28 countries. Internationally, we're very strong in terms of setting up companies overseas and managing these companies in capacity of a director, nominee shareholder, registered office address, whatever it takes to keep the company in good standing. Similarly, we're a licensed trust company internationally and among the top 5 globally. With that, we also have funds of our own, which do a lot of FDI and FPI investments into India and other geographies. So in one of the slides, Rajesh ji had covered that you could have an offshore vehicle, you could have a pooling vehicle. So if your corpus is not very large, or if you want to diversify from an NRI issue, that's the time when you could use these share class vehicles, which we could offer you overseas. Similarly, we set up funds internationally for and on behalf of our clients, where we are pure fund administrators. I think we've done close to 500 plus funds so far internationally, where the entire fund administration, NAV calculations, reportings, everything is done by us. With that, we have a small banking license with a bank based out of Barbados under the name ABT, which is Amicorp Bank and Trust. In India, we've been there since 2005. We have close to 200 people based in India. In India, we specialize on the trusteeship work, where we do the entire end-to-end trustees for family trust as well as AIFs. The role of a trustee when it comes to an AIF is more or less very limited, but at the same time very important and more or less mandatory. The trustee's role is something which is the payout to a trustee. It happens through the fund or the fund manager. But then the job profile of a trustee is to represent the client. So he is actually the bridge between the investment advisor, the client, the regulators. And a lot of times that becomes a very crucial role to play, more passive in nature, but gets active when the need really arises. So identifying a right trustee who has the bandwidth to deal with tough situations is what you need to look at. Alternative investment funds, we all know what it is. So category-wise, again, 1, 2s, and 3s is not something new for us again now. Minimum corpus and all of that is something we all aware. We all aware 1 CR minimum requirement and so on and so forth. This is how the structure looks, very commonly used with a sponsor or an investment manager. You have a set of trustees, and you could have different portfolio companies' investments through that. So a very standard common AIF structure. Gift City is something which is more or less a lot of talks happening around it. Some people have already started experimenting in the Gift City. A lot of people are sitting on the fence, wondering whether that is the right move to make, wondering whether that is the right thing to do. But in my view, personally, I think Gift City is a good space to be, especially if you're looking at international setups. It could be a good alternative option to a foreign fund from a cost point of view, from a ease of management point of view, from a distance point of view, from a consolidation point of view. So from a overseas fund to a Gift City fund could be a very good alternative to look at. And that's where a lot of traction has been seen in Gift City. We also have a presence in Gift City. We offer the entire trusteeship scope from Gift City as well as the fund administration piece. Basic information again, which is more on public domain anyways. You get a tax rebate, you get 0% alternate tax, stamp duty, capital gains. So there is a lot of the tax piece which attracts clients to move to Gift City. So anything between the first 15 years of your tenure, you could choose 10 years and say that I've qualified for no taxes in those 10 years. So in general situations, we see that from the time I start to 10 years, I'm going to get a tax break. But for the first 2 years, 3 years, I'm still establishing. So the literal tax break what I get is for the last 7 years. But in Gift City, what they've done is they've given you a 15-year window, and you can choose any of the period from there and say that first 3 years I'm okay to pay taxes because my income is bare minimum. And then 4th year onwards, I'll go under the tax-free regime. So they've tried to customize this to a lot of ways to attract people, but of course, a long way to go. So similar thing, low operating cost. Again, it's a psyche that India is cheap. So every time the highlight is low operation cost, low cost, low cost. But I think somewhere we need to change that. Again, a similar categories what are there in the domestic AIF is also replicated in GIFT with its own numbers of minimum investments, amounts to be invested, and so on and so forth. Pass-through status on income tax purpose, non-residents investments can come in, residents investments have a catch on that. Recurring income, non-resident investors from offshore, not taxable in India. So these are, everything revolves around how it has been taxed and how it will be benefited for the fund manager to generate higher returns. A similar graphical view on what the structure will look like. Similar foreign investors, you have an IFFC manager, you have a sponsor contribution and the set of trustees, and then you could have underlying investments. You could also manage foreign investments through GIFT City. So it is not only pooling money to bring into India, you could also set up a GIFT City fund and manage international investments through that. So a lot of domestic fund managers who are aspiring to manage or diversify their clients' money into foreign stock portfolios could also look at GIFT as an option. Whereas you have a cap of 25% of how much money you can push out of the domestic AIF, in a GIFT City you could push out 100%. So this is where the outbound piece comes in, where you could have 100% money collected, pushed out, not necessary, it's collected only to bring into India. So you have a inbound option and you have an outbound option. Comparison between a domestic AIF and a GIFT City, I don't think it's really healthy to compare the two because both qualify for different objectives. But for discussion's sake, the comparison's been made. So you're allowed to borrow in GIFT City where there's a prohibition of borrowing or limitation in domestically here. Your investment criteria of 25% and 10%, which follows in the domestic one, maximum cap investment. And that's again where the role of the trustee comes in, because he is working with the fund managers, working with the investment advisors, but working on behalf of the clients. And that's where the maker checker comes in, that the fund has not overexposed its risk, not gone above a threshold limit of 25%. So there are a lot of checks and balances that the trustee brings into the entire scheme of things. Filing and signing your last audited statements, tax returns to the investors, waterfall calculations. A lot of it, though, the fund manager is working with the custodian who's doing your fund accounting or an independent fund accounting. But end of the day, it is the trustee that is supposed to sign off on everything and make sure that everything, the checks and balances are in line. So again, just a few set of services that we offer. We offer the entire setup, which is the onboarding of clients to execution of documents, working with law firms, working with other regulators, documentation, vetting and signing, the compliance piece for an AIF, other duties and responsibility that the AIF is mandatory to do. So you will come across clients who will, so there are two pieces of work that is there. One is good to do and one is should do. So a lot of people choose to do only the should do. But if you're looking at raising money, if you're looking at building credibility, if you're looking at building long-term standing, then I think the should do should also be taken into consideration. So again, the structuring piece of the trustee, so the execution and registration of the trust and all the operational work is done by us. Processing SEBI applications, reviewing trust deeds, investment manager agreements, PPM, contribution. So all these agreements would be made by a law firm or would be made by someone like a Deloitte or whoever you appoint to work with. But end of the day, it's the trustees who will vet these documents for you and make sure that everything is in line with what your requirements are or what you really intend to do. So signing on all documents, PAN card, TAN card, applying for bank account opening, at times signing also on the bank accounts, keeping a record of the funds, appointment of auditors, financial statements. So financial statement becomes the final statement where you really what you want and what you returned. So it becomes very important of how it has been accounted for. Outgoing affairs and other liaising with stakeholders. AIF operations, again, we do the entire end-to-end operations for an AIF, where we act as a single point of contact and coordinate between all your other service providers and other key stakeholders. So there are two approaches that we've commonly seen in the market. One is that let me go to a service provider who does everything. He's also my fund accountant, he's also my custodian, he's also my RTA, he's also my trustee. So let me just go to one gentleman who does everything, or one organization who will cover all services. A last school of thought comes around from a conflict of interest point of view. Do I really need to go to one service provider for everything? Or should I go to the best available for the expertise that they carry? So there are a lot of clients who would go to a custodian and also want to do fund accounting, or go to an RTA and also want to do fund accounting. But there are a bunch of clients, and the last sum of that, who would say that, I don't want my trustee and my fund accountant to be the same person, because that brings in conflict of interest. So does it bring in conflict of interest from a regulatory standpoint? No, because SEBI or any of the regulators don't restrict you from doing that or having a common point. From a ease of management, people think it becomes easier. But from a hygiene factor, you can have different opinions there. So again, we act as a one point of contact for you. If you choose to have multiple vendors or multiple service providers, we can be the point of contact and coordinate everything for you, where you really don't need to worry about putting all your eggs in one basket. Again, this is a very important piece that we've started over a period of time. So our journey has not been very old. The AIF regime by itself has been 4 or 5 years old. When we started the AIF, we were pure trustees. But as we went by, there was two set of clients that we were working with. One was the larger set of clients who had an AIF, PMS, mutual fund, everything, big team, doing everything in-house. So they required only a trustee. Then we came across a lot of fund managers who branched out from larger organizations, set up their own funds. They have the expertise of raising money and deploying money, but they don't have the bandwidth or the intention to get into operations. And a lot of push from those set of clients saying that, while you are my trustee, can you also look at other things? Whereas we are global fund managers, we are managing more than 500 plus funds globally. But domestically, we've entered that space slightly late, because again, everybody thinks India is cheap. Nobody is willing to pay. So of course, getting the right thing at the right price is also important. So we've now got into the entire onboarding process of KYC, PMLA, world checks, registration with KYC, CKYC, KYC checks on periodic basis. So there are certain fund managers who say that I would like to do a KYC check on my investors every year. There are certain fund managers who will say that I would like to do a KYC check every time I have an interaction of money with the client, whether I'm doing a drawdown or whether I'm doing a payback. There are certain who will say that every 3 years we want to do a re-KYC. So there are different objectives and different ways of managing. Like I said, should do and good to do. So that's where the keys come in. And we do the entire onboarding of clients totally digital. We've done onboarding for, I think, 20 plus funds already so far, including Gift City. Fund compliance and fund accounting entirely end-to-end services are offered. It is very easy for us as a fund administrator to plug and play, since we have the global expertise. So if you have foreign investors, you have foreign clients, you have domestic investors, it becomes even more easier. So the entire fund compliance and fund accounting is now also what we do as a trustee, or under the fund administration piece. Company secretarial is again a plug and play for us, where the underlying entities can be managed, or the investment manager entity can be managed, local directors can be provided, a lot of the checks and balances can be taken into consideration.